Today, we're diving into the mind of Tony Deden. He's a really private, deeply principled investor who honestly operates on a completely different wavelength from almost everyone else in the financial world. You could say he's a throwback, and his way of thinking might be more important right now than it's ever been.
And just so you understand how unique this guy is, he's a bit of an enigma. For years, he politely turned down every single interview request. The conversation this explainer is built on, that was the first time he ever agreed to go on camera. He's not looking for the spotlight, you know? He's looking for substance, and that's what makes his perspective so incredibly rare.
So, how does a story like this even start? Well, not with some grand plan. Deden pretty much stumbled into his life's work completely by accident. We're talking way back in 1985. A family asked him for some help with their investments after a death in the family. Then one family became two, then three, and suddenly his path was set. Right from that very first moment, something hit him. It was this profound realization that would end up defining his entire career. He wasn't just, managing money. He was the steward of what he calls irreplaceable capital. And think about that for a second. This is everything a family has. It's a lifetime's worth of work. It's not a game. You make a mistake, and you can't just hit reset. And this brings us to a really, really crucial difference in thinking. For most of Wall Street, risk is all about volatility, right? Swings in price. But for Deden, risk is something much more primal. It's the permanent loss of capital. The idea that the money could just be gone forever. When you think about risk that way, it changes every single decision you make. All right, so let's jump forward in time to the late 1990s. The dot-com bubble was in full swing, everything was going crazy, and for Deden, this whole period triggered a massive crisis of confidence. He looked at the financial world and it just didn't make sense anymore. So he started questioning, everything. You can almost see his journey on this timeline. In 98, he's seeing prices completely detached from any kind of reality. By 99, he's deep into what he calls soul searching. And instead of just going with the flow, he did the opposite. He went all the way back to square one, to first principles, until he came to this pretty shocking conclusion. The system itself was false. And this wasn't just some intellectual game for him. As he put it, the weight of that doubt was an enormous burden. I mean, can you imagine? When you're responsible for people's life savings, the stakes of being wrong are just immense. It takes a ton of courage to stare that possibility right in the face. But it was out of that crisis, out of that fire, that he had this monumental revelation. It was a shift in thinking that became the absolute bedrock of his philosophy. He realized there is a huge, fundamental difference between being an investor and being an owner. And this chart just lays it out perfectly. It's like night and day. An investor, they're focused on price. They're hoping to sell to the next guy for more. They're guided by the market. But an owner is focused on survival. They're interested in building something real, something with substance. Their guide is the balance sheet, not the ticker tape. And they accept that true ownership isn't always liquid. This quote just cuts right to the heart of it all. A true owner isn't glued to their phone, watching the stock price go up and down. They're thinking about their customers, their employees, their products. They're trying to build something that lasts, not something they can just flip in 6 months. Okay, so now that he has this owner's mindset, Deden creates this simple but incredibly powerful framework to guide his decisions. It's all built on 3 core pillars, ideas that help him find businesses that are built to endure. And here they are, the 3 pillars: scarcity, permanence, and independence. This isn't just a catchy phrase. It's the lens through which he looks at absolutely everything. It's his foundation. Let's dig into each one. So first up is scarcity. And he's not just talking about scarce materials. He's looking for scarce skills and, this is key, scarce character in the people who are running the business. Second, permanence. Is this business built to survive for generations, or is it just built for rapid growth next quarter? And third, independence. He wants businesses that aren't fragile, that aren't dangerously dependent on one supplier or a government contract to survive. So how does he actually put all this into practice? Well, the first step is pretty radical. You have to intentionally pull yourself out of the noise, out of the entire vocabulary of the modern financial world. His process doesn't start with, what should I buy? It starts with, what should I ignore? He has this brilliant name for it, his great broom theory. And the idea is to just sweep away almost everything right from the get-go. Okay, just look at how this works. The numbers are staggering. He starts with the entire universe of over 78,000 global companies. First, sweep away unstable geographies. Then, require basic financial health. Then, and this is a big one, sweep away the entire financial industry. After a final cut, that whole global market is whittled down to a tiny universe of maybe 250 to 300 companies. That's it. That's his entire playground. So if he only invests in a tiny handful of companies from that very short list, what on earth does he do with the rest of the capital? Well, a huge chunk of it, 35%, is held in something most money managers today wouldn't even touch. Yep, you're seeing that right. 35% of the capital is held in physical gold. I'm not talking about a paper contract or an ETF. I'm talking about actual physical metal held in a vault. In today's world, that's practically heresy. But for Deden, the logic is crystal clear. And here's why. It's so simple, but so profound. The cash you have in a bank, that's the bank's liability. A government bond, that's the government's liability. They are promises. Deden wants his reserves to be a real asset that isn't dependent on someone else's promise to pay. And gold, well, it fits his three pillars perfectly. It's scarce, it's permanent, and it's independent.
You know, this gets to an even deeper point. We're all obsessed with liquidity, right? The ability to sell something in a split second. But Deden's point is that liquidity is an excuse. It's an excuse to not really understand what you own because you can always just hit the sell button. True ownership demands a totally different level of commitment.
So after all of the numbers are crunched, after all the filters, Deden's final test comes down to people. He asks a simple but devastatingly effective question. He looks at the CEO and asks, if I owned this entire company, would I hire this person to run it for me? And if the answer is no, why on earth would you want to own even a small piece of it? It's just that simple. This quote just nails his focus. He's not in the get-rich-quick business. That's a different game. His world is for people who have already built something, and now they're facing the much harder task of keeping it. And as he says, the tools you need for that job are completely different. So in the end, Deden's whole philosophy is really an antidote to the chaotic, short-term noise of modern finance. It's a return to first principles, being a careful steward of capital, having immense patience, and doing the simple but radical thing of truly understanding what it is you own. And that really leaves us with a big question to chew on. If Deden is right, if liquidity is just an excuse to not really understand something, then take a look at your own investments. What do you truly own? And what are you actually betting on?